All right, good morning, guys. Happy Monday, the 9th of June, 2025. All right, a couple of sound checks here. Good morning, Miss Lorna, Miss Mandy, Mr. Mirza. Good morning, Eric. Good morning, Steve. Yeah, hope you guys had a great weekend. All right, so let's get jumping in here. A couple things from last week. You folks here on YouTube, you folks here in the showcase room. I only get you on Mondays and Wednesdays. So a couple things we called last week were took a loss in Palantir, took a profit in Microsoft, took a profit in the QQQ, a loss in Spotify, and a loss on FAST and a profit on Spot. So quick look at a couple of those. For the QQQ, jumped in and grabbed the 425 not 4, 5. Grab the 525, 530 call debit spread on the hourly squeeze. Let me get my recording going here. Get me drawing tools. But yeah, so for the Qs, had the white arrow squeeze here on the hourly. So jumped in, bought the out the money call debit spread, sold that for about 40-ish% profit. And then for the Palantir trade, that's what it should do when it all works. Squeeze sets up, white arrow, the structure, the trend, all the fixins. The opposite would be the Palantir 30-minute. QQQ is a good behavior. The Palantir is the poor behavior. Bought that one off of the 30-minute squeeze. Great setup, great entry, the push. And then everything I liked about it kind of disappears the following session. 21 EMA breaks, the 50 breaks, momentum breaks, my heart breaks. We took that off for about a 30% loss, which I think is a great exit. All right, they flushed it, they popped it, and then the bigger flush. So took a good L on Palantir, and then the daily squeeze here for Spotify. Took a little bit of patience, which will happen. We got long on that candle. Beautiful daily squeeze, white arrows. Got long on that candle, had the immediate rejection. All right, little dip, little pop, a flush back to the 21 EMA. All right, they hold it. Finally turn the corner, break it out, and trigger the squeeze long. So took some cash out of that one, and then the Microsoft call fly. Which I'll admit, when it comes to a call fly, I'm not the best at playing for that pinning aspect. I'm more the guy. All right, if I got a call fly on Microsoft and a center strike at 470, and on Wednesday or Thursday they pop it in the 470, I'm a little bit inclined to take the paycheck. But of course, on this example, they closed the bad boy at 470 and 38. We bought it for $1, sold it for $1.80, which I'll take the 80% profit. I think the trade settled around closer to $5. So $1 to $5 is a little bit cooler than $1 to $1.80. But yeah, pretty good week there all in all. And now on that spreadsheet, what do we got? We got 14 trades left until we hit 100 trades. And these are all of the alerts I've sent out in my room. Since we launched the white indicator last year, the white arrow indicator, good mix of some long, some shorts, bigger time frame, weekly squeezes, smaller time frame, 15-minute. Got some futures trades in there. All in all, some pretty good stuff. But we got to finish up strong here for the final 16. But all right, for the week ahead here, futures action. Good-looking 15-minute squeezes here on the NQ, the ES, the IM, and the RUT. Give y'all a quick peek of those bad boys. This 5-minute ES. Okay, so 15-minute squeeze white arrow. Big 3 score of 15, all the structure. And then the 1-hour ES. Squeeze white arrow. The 4-hour ES. squeeze white arrow, and your daily squeeze, brand new daily squeeze, it leans bullish, of course. You're getting 13 points to trend structure. It's an A minus, not an A plus just yet. But yeah, from that point of view, your daily, your 4 hour, your 1 hour, your 15-minute squeezes, till things change, they're aligned for continuation higher. Then factor in a 6,000 SPX. Is and will be a pretty big level. For the cash here, you also have a 1 hour and a 15-minute. So the only thing I would say here is be careful and don't fight the signals. I'm not looking for a short, but be a little bit careful for a pattern of, they gap it up here at the open, we push, we move away from 6,000 and then quickly dump back below 6,000. Like, I don't think it changes too much. I don't think the market will fall apart, but could be a case of, little short-term bull trap. They pop it, come on in, water's warm, grab your calls, and then, maybe a decent flush into a buy zone. Selfishly, I would love, little pullback into 5,900. Couple days of chop, a brand new daily squeeze. We all know what to do with that. But yeah, futures. 1 hour A plus on the NQESYM. 15-minute A plus on the NQESYM and the RUT. 4 hour A plus on the YM S&P futures, and then again, cash S&Ps 1 hour and a 15. Cash QQQ 1 hour, 30-minute, 15-minute. And we'll like them a little bit more with a white arrow. So same exact trade we took last week. Let them pull it back. Let them chop it. Let them catch their breath. They print the white arrow. They get the alignment. Great spot for call debit spread, long calls, put credit spreads, butterflies. And to get the white arrow, they pull back and break your 21. I think in most cases you cut bait and move on to a greener pasture. What we found is about 70% of the time they want to go and do that. Energy being built up, compression, trend, structure, momentum, and the sweet release of the energy. Point being, if they can turn the current 1 hour squeeze into that kind of 1 hour squeeze, I shall be a buyer. If not, not going to short the thing, but a little patience. Okay, so there's the cash indexes, and then take a quick peek here at the rankings. Rankings are bullish. You got the indexes at 79% of their best collective score. Big 10 basket at 63%, sectors at 57%. Looking down here, with the exception of healthcare, every sector is positive. I'm not going to go buy an energy, an XLY, a biotech. They're a little bit more neutral, but communications. I hate trading silver, but communications. You got silver, industrials, financials. You got Kathy Woods, XLK, Big 10, the SMH. Plenty to work with. And then for the Big 10 basket, I'm not going to be the first guy to call for a bottom in Tesla. Negative 13. Apple's getting better, could get a lot better. Negative 3. But then a Google, Broadcom, Nvidia, Netflix, Amazon, TSM. They got that good stuff. Then a few of my favorites would be the S&Ps, Microsoft. Few things trying to get going here in the financials. I like DoorDash. I like AT&T. JP Morgan, XLK, the Qs, SMH, and the Google. We'll run through a few of those here. So I'll give you a mix of shorter term ideas and bigger picture ideas. For the bigger picture stuff, so for a good example, the S&Ps here on the monthly, you pop open the chart for you. All right, so we got a monthly squeeze back here in October of 2019. And from your 21 EMA to the top, They build up the energy, they fire, they push. That kicks off a 20+% move. And then that little thing called COVID happened. The market pretended it wanted to go into a bear market. All right, they dip it, they pop it, they print an A+ monthly squeeze. Now, granted, that was a special time, of course. That one kicks off a casual 65% rally, and they pull it back and they chop. Now here's the thing: that chop period is June of 22 up until December of 23. So it's not like a 5 minute, 15 minute, 30 minute squeeze where they might begin squeezing at the open, and they're trying to fire by lunchtime. They can chop and squeeze for 4, 5, 6, 7, 8+ bars. The beauty, though, when they finally fire, it's not going to be a little, or usually not going to be a little, 2, 3, 4, 5% push. You can get that from a 15-minute, 30-minute hourly squeeze. They pull it back, they chop, squeeze fires. That is a 45% rally. So, point being, they don't happen too often. But when they do and when they fire, they can definitely pack a punch. So, a few interesting monthly squeezes. One would be the tech ETF, the XLK. Monthly squeeze, white arrow, big breakout. Big initial breakout, but it also sparks a big trend. They push, they kick back, they hold, they keep it going. And they pull back, they squeeze, they push. All right, so now here we are, brand new monthly squeeze, another white arrow. Again, this isn't today, tomorrow, next week conversation, more of where are we come December conversation. If they do break it out and fire long, we're looking up here around that 2.5 to 3 ATR target around, 270s to 280s. Nothing says it has to fire long, but the odds say until things change. That might be the path forward. And then the SMH here, we're home to the NVIDIA's, Broadcoms, all the above. Monthly squeeze kicks off a 50% rally. We'll call it a monthly squeeze. It had one dot. That kicks off a big push. You pull back, you chop. Brand new monthly squeeze, brand new white arrow. We might be here Christmas time talking about the same exact setup. But if they do fire it, I think you're looking up here 300, 315. Now, the key for that will be, of course, can a name like an NVIDIA, a name like a Broadcom lead that charge? I don't think you're getting that on a strong AMD or a strong Micron. But better yet, if you can get an NVIDIA, Broadcom leading the charge, and they do go on and break out the SMH, then that's a great time to be long the Broadcoms, LRCXs, all of the semiconductor characters. Keep an eye on that one. Next up here is Microsoft. Brand new all-time high last week. Now, the tricky thing about this monthly squeeze, it should still look really bullish. On a pullback in the 450, a pullback in the 430, it'll maybe have that white arrow all the way down to about 405. And nothing about the signal says, "Hey, here comes a $70 pullback." But stranger things have happened. So, point being, if I could have it my way, which isn't all too often, but if I could have it my way, I want to be a buyer maybe closer to 425-ish. Putting that aside, they take it, they break it out, squeeze fires long, gradual path into 500 and change. In another way to look at it, one way to play that, of course, is all right, I'm going to come in, I'm going to buy in the money call, out the money call. I'm going to build up some sort of trade. I'm going to give the thing enough time to work. And I think on a monthly squeeze, it's more of a set it and forget it. If you're long based on the monthly squeeze, I don't think you're sitting there watching a 5-minute, 15-minute time frame every day. So that's one way to play it, of course. But keep in mind when a bigger time frame squeeze fires, a good example here could be uh, the weekly squeeze of the Bitcoin futures. So when this fires long back here, yeah, it's a great time to buy Bitcoin back here at the buy zone and hold it. And one might argue that makes your life a lot easier. Try to imagine though, during that big push, all of that release momentum off the weekly squeeze. Imagine any daily squeeze, any hourly 15-minute, 30-minute during that overall push. They don't all fire long, but a majority of them do. They're getting a crap load of wind at their back from that big weekly squeeze. So I can buy it back here and swing trade the move, or I can say, hey, here's a big breakout, here's a big squeeze firing. In most cases, weekly squeeze fires are going for a big push until that thing runs out of gas. Let me sit here and trade every 5-minute, 15-minute, 30-minute hourly squeeze I get. We did that with the gold futures. It's that times 10 when a monthly squeeze fires. And then the final one here would be the Google. In Google, actually at the buy zone. All right, they pull their back, they print the squeeze, they chop, they get the white arrow. Kicks off a 55% push. And they pull back, they push, they pull back, they chop. Brand new monthly squeeze, brand new white arrow. If, right, no guarantees, no promises, but if they break it out and the squeeze breaks long, by that time, target's probably going to be 240, maybe closer to 250. So one way to trade that is, all right, I'm going to go to the Google options chain. And I'm going to go maybe out here to June of next year. And then figure out what's my risk tolerance. Could I buy a handful of the 200 calls, accept the max loss, set it and forget it, and let the trade work? Right. If not, maybe I could do a call debit spread. Maybe I can sell some put credit spreads. But if I've got a year and change till expiration and it's based on the monthly squeeze, for the sake of that trade, I can't be here Monday through Friday for an entire year. Oh God, there's a 1-minute sell signal here on Google. Yet your monthly chart really won't even notice or care. You buy it, you put a chart alert down here, maybe 157. All right, yeah, they pull back, they break that monthly 21. Maybe at that point I'll think about cutting bait. I think a better way is just size to accept the max loss. Come back a year later and check up on it. So a few bigger picture ideas for you. And again, if they do fire, that can make for a lot of great short-term ideas. A couple weeks down the road, here's Google with a perfect daily squeeze setting up. Good to know they got a big monthly squeeze behind it. But all right, so all that being said, again for futures at the open here, watching the S&P futures 4-hour, 1-hour, 15. Watching the NQ 30-minute, hourly 15-minute rather, which could be a great gauge of today's overall direction. Getting to the cash open, NQ breaks out, triggers a squeeze long. Great for cash QQQ, great for Nvidia, Microsoft, all those fellas. Cash market opens and the QQQ 1-hour squeeze goes nowhere. Maybe more of a choppy day. And then the opposite could be true, of course. The old dumper. But watching the 1-hour, 15-minute cash S&Ps, bigger picture ideas watching the monthly on Microsoft, Google, XLK, and the SMH. All right, and then shorter term stuff for you. So I do want to look at a few of the banks today. If we check the financials here on the sector rankings, they come in with 93% of their strongest score. We can work with that. All right, right now XLF has a daily 4-hour, 2-hour, 5-minute squeeze setting up. No white arrow on the daily squeeze just yet. Would make it a little cooler. Got to get one here on the 4-hour, and then I think you have one for the 2. Nope, not quite yet. So in terms of the overall group, if they could get a white arrow on either the 2-hour, 4-hour daily, or all the above, then that can make that a little bit more of a, right here, right now kind of setup. Where if they can break out the 2-hour squeeze, go and wake up the 4-hour, go wake up the daily squeeze, there's your short-term push. So with that, I do like JP Morgan. JP Morgan, daily 4-hour, 2-hour, 15-minute, with a white arrow on the daily. Now I think the kicker for a push here would be getting that white arrow on the 4-hour chart. And notice right when the 4-hour squeezes, you never have momentum. Well, they've got momentum, but it's on the wrong side of town. Okay, so they pop it and they pull it back in. They pop it, pull it back in. Give the Bulls their credit. They do a great job of holding trend and structure. But tough to get that immediate, pop, breakout, and push. Till momentum supports the idea. But thinking about a long on JP and then got Goldman here. Goldman with a daily and a 4-hour squeeze. You got Wells Fargo. Daily 15-minute. Morgan with a 5-minute. So a few of the bank stocks, and then what else we got here? Covered Google, covered the SMH, covered the Qs, XLK, JP, and then AT&T and Dash. The T and the Dasher. Very big nested squeeze here for DoorDash. Nested squeeze meaning multiple squeezes all at once. 3-day time frame, 2-day time frame, daily 4-hour, 2-hour, 15 and the 5. My only gripe would be if you look at the daily squeeze, or you look at your daily chart in general, you haven't had that MACD bar above 0 since early April. I don't love that. Again, give them their credit. No negatively stacked EMAs, no squeeze breaking short. They keep good trend and good structure. But that kind of move you're getting back there, you always got to have all three. I would even argue you can get a move like that with just momentum. Then the structure and the trend can try to pick up. So that could make for a good entry on a momentum shift and a white arrow. If not, it might remain a little choppy. A little too choppy for a fella like me. And then final one here for you fun folks would be the DoorDash, which I'll admit I'm a little bit late on. Johnny come lately on the DoorDash. It's not my favorite spot to buy it. That'd be closer to 200-ish. But beautiful monthly squeeze, weekly squeeze rather. And from a timing perspective, I love how you're catching that white arrow on a fresh cross. Sometimes you get it and momentum's been above 0. Price pulls back, prints a squeeze. This is a nice fresh one. Bear cycle kicks off and you're chopping. Fresh turn, fresh tank of gas. So yeah, if they can keep that above the previous highs around call it 215, they might want to go towards that 230, 240-ish. A guy like me got to buy out on a pullback, or I got to buy out on a lower time frame, which could be a 1-hour squeeze that looks like that one from back there. But all right, guys, few things for you. couple squeezes setting up in the futures, couple squeezes in the cash markets. Got a big monthly squeeze in XLK, SMH, Microsoft, and Google. Shorter term ideas in JP Morgan, financials, AT&T, DoorDash. But like I mentioned, we're at a pretty big spot here. So if it's a market where 6,000 is new support, we're only about 2 to 2.5% off the all-time highs. Not saying we got to go there today, tomorrow, this week, but I think if you're above 6,000, they might want to go and get the job done. Back below 6,000, maybe more of the chop, maybe daily squeeze setting up. Then a little bit more oomph for breakout into a new high. But all right, guys, I got about 3 or 4 minutes here. Any questions, any chart requests, I shall take a look for you. And then folks in my room and the MTT room, be there with you for the open. All right, good morning, Robert. Good morning, my man Terry, Unique Trader, and Art. Good morning, guys. All right, Robert, MA Visa. Yeah, two good call outs there. Both ranked out really well. Let's see. Yeah, really good. Visa's got 98% of its best score, and so does Ma. The MA. Beautiful daily squeeze, bunch of buy signals, no issues there. Nothing bad we can say about it for now. And then the Visa, a little action on the hourly. All right, white arrow, the pop, the chop, white arrow, and then the weekly, the big W. If becoming a $400 stock is in Visa's short-term future, what better than a weekly squeeze to get you going towards that target? Yeah, really clean. I like them both. Hey, good morning, Steve. Did I review JC's Momo from last weekend? Yeah, I watched about half the class, and I got whisked away by my wife. So I'm thinking maybe later in the afternoon or later tonight, I'll sit down and watch the second half, and then try to figure out ways I can implement it into everything I'm doing here on my end. I did look at a few examples where it tied in nicely. A lot of them on the lower time frames, oddly enough, or maybe not oddly enough. But yeah, I got to get through the second half of the class, and then my deep dive shall begin. Good class though, good crowd. Typical Johnny Carter stuff. Did you guys see that video of Ed the zebra? Made me think of John. I think Ed the zebra is a zebra from Tennessee who broke out of his zoo over the weekend. Let's just say Ed had him quite the tromp around town. They had to airlift the old guy. I'm thinking, is that one of JC's? Hey, what's up, David? Good morning. So do I wait for a pullback to get my signal? And how far do I let it go against a 21 EMA for a stop? And then thoughts on VST. Yeah, so great question. I'll wait for a pullback for an entry. If price is in, right near that 21 EMA on that given time frame. Of course, the best entry possible is buying it directly on top of that 21. But I think as a general statement, anything near that 21 EMA within, call it one average true range move of that 21, that can make for a good buy zone. Thinking in terms of average true ranges, on most trades, I'm taking profit around 2.5 to maybe 3 ATR above that 21. So from a reward perspective, where I get long really matters. If I buy it at 2 ATR and I'm thinking to maybe pop it into 2.5, well, my reward is half an average true range move. But if my buy zone, my line in the sands down here at my 21 EMA, right, I'm buying it up here at +2. I maybe catch half an ATR, or I'm taking a $2 or a 2 ATR pullback on the chin. Whether I'm buying the equity, buying calls, whatever the case might be, uh, not on the right side of risk aboard. If I can buy it, maybe say, half an average true range move above that 21. Now my risk is maybe half an ATR and change in exchange for, maybe 2 to 2.5 ATR in my favor. So Visa being a good example, I'm not going to buy it up here at my full size. I'll maybe buy it with quarter of my full size. In the back of my mind, kind of hoping it pulls back one more time. Then I can take my full size back here near the buy zone. So for a bigger picture idea, that's what makes Google really interesting. Hey, I could buy that monthly squeeze pretty much on top of the buy zone. And then to answer your second question, which is a great question, how far below that 21 EMA do I let it go before cutting the trade? It's a context thing. Um, the first thing I'll say about that, when they work, they never put us in a position where we're having that conversation. When they work, they're a lot like that QQQ trade. All right, here's a squeeze, here's the white arrow, all the alignment, all the structure. That should point towards that stock, that time frame, wanting to do one job. Rally away from the 21 EMA, fire the squeeze, push towards the target. All right, should look like the Microsoft hourly. All right, squeeze setting up. No funny business. No break of your 21. No break of the 50. No canceling the white arrow. Smooth sailing. Break it out, and they push. All right, should be like the Spotify daily squeeze. Now, if you look at Spot, it did technically break the 21 EMA, but to the tune of about $2 and change. So I think in a case like that, all right, we're dipping our toe below support. You want to give that a little room to breathe. If it's we're down here at 625, then I'm thinking a little bit more. I'm going to shoot first, ask questions later. Knowing when they work, we shouldn't really end up in that position. And the tough part about that mentally is you got no idea what happens next. So we took a loss on FAST last week. Right now, is it a pain in the ass? Of course. A lot of things in trading are, frankly. All right, but we're buying it back here with the idea they've got the white arrow, they've got they've got everything. We're buying it back. Where did we buy it? We bought it back here. Right, buying it on that white arrow, thinking not that we're going to pull back and break the 21, come down to the 50, get sell signals. As JC would say, we're hiring it to do one job. That one job being fire the squeeze, break out, rally into 43 and change. All right, so then comes the morning of the 22nd, and we pull back to the 21, break our 21. Now we're getting down here closer to $40. And your 5-minute chart's getting a little bearish. You're losing your lower time frame buy signals. At that point in time, we've got no idea what's going to happen next. Am I going to cut the trade here and look like I know what I'm doing with Palantir? Because sometimes that'll happen. Right? I'm buying it on my 30-minute white arrow. I lose my white arrow. I cut bait, and they pop it, and then they completely dump it. So there's a trade where I'm patting myself on the back saying, hey, good exit. You lost your criteria. They broke your level. You got the heck out of that one. And then there's going to be times with FAST or like in FAST, they pull it back, they break that 21 EMA, I jump ship, and then by the time the candle closes, they pop it, they're back above it. A few days later, squeeze breaks long. Again, when they work, we should never be put in that position. What we found together is a little bit more than 70% will work. About 30% won't work. In the 30% that won't work, they're going to come in all shapes, forms, and sizes. Some of your losing trades will look exactly like that. All right, I'm long. Here comes the push. Oh boy, here comes the pullback, the breakdown, the break of support, the canceling of the pretty colors. You're going to have some losing trades that look like that. They shook you out like a leaf, turned the corner, broke out, and got the job done. You'll have losing trades that look like Palantir. You're looking back a day later thinking, all right, I'm really glad I took the exit. Our goal is, can we have a net profit after every 25, 50, 100 trades we take? As Mark Douglas would teach. But all right, guys, I got a jet. So David, let me take a really quick look here at VST. It'll still look bullish on the pullback to about 160. Not to say it has to. Short-term idea, I would buy it on a white arrow on the hourly squeeze. The hourly 30 or the 15-minute. But all right, guys, thank you again, folks in my room, folks in the MTT room. I shall see you over there. For the rest of you, I'll be back same time, same channel on Wednesday morning. Make it a good week. Go get them, and we'll talk then. Adios.